Welcome back to Trading Edge 360. Mike Smith, the CEO of Trader IQ, will be presenting very interesting on how to make money while you sleep. I think most people like to make money and most people like to sleep, especially myself. I love that. So this is going to tell us more about exciting innovations in automated trading. Thank you, Steve. Please take it away.
Hi, everybody.
Sorry,
Welcome.
Mike. Sorry, Mike. Please take it
It's
away.
all right. It's all right. You can call me anything you want if you want. Right. Let's do this. So I'm just checking in that you can see my screen. If you can let me know, that would be wonderful.
Yes, all good. We see your screen.
Fantastic.
Yeah.
Now, a couple of really important things to start with. First of all, thank you to B and Alex and Sue for making this happen and for inviting me along to share some thoughts and ideas. It is a pleasure and a privilege to be with you all. I can't actually see the chat for the general chat, if you like. So if there's any way I can see any questions and comments, that would be wonderful.
Don't
Please
worry about
forgive
that.
me.
I'll let you know about any questions, Mike.
Oh, okay.
Yeah.
Okay. So if you are here, thank you also to you guys from Trader IQ who have rocked up to give me a bit of support. It's wonderful to see you guys here too. And of course, those who aren't with Trader IQ, I'm delighted to have the opportunity to share some things with you that we're doing. A couple of other things to start with. First of all, make a note of my email address, mike@traderiq.com.au. There may be questions you have that you want to ask outside the session. That's absolutely fine. And I've also asked Sue, because she's a legend, to post a copy of the slides up from the presentation today. What that means is you don't have to, you can sort of focus on what I'm saying and of course what I'm doing. I'll just what we'll do is feel free to ask questions at any time. You don't have to wait till the end. You don't have to wait till specific points. Put them in as they come to you, and I'll do my best to answer them all as we go. Just this obviously important message to remind you that Trader IQ provides education material, trading tools, and courses, including the use of automated trading models and hybrid trading models. And these are market tools which you need to test before, during, and on an ongoing basis. If you're going to be tempted to put them into a live environment or make trading decisions on them. So that's really important that you take that on board. And of course, you should only scale. We always advise that whenever you're using anything like this, that you start at low volume, low trading volume, so you can make sure that it is doing what it says on the can, and then you should scale according to some specific criteria. That important message being shared, let's start by challenging a myth. The myth is that automation is new to you. Now, I don't know many traders that don't use some degree of automation. So let's start with that. The majority of traders use some form of automation on their platform, be it system stops or take profits or pending orders, or even slightly weak but nevertheless important trading stops on, for example, MT4, MT5. You can get a system trail stop in as well. So this is not entirely new to you, and that's really important because there's a lot of scale, a lot of myths around automation. And fear of losing control. But what I'm going to share with you today is not only about full automation, but arguably that there is room for a hybrid system as well, rather than wholly discretionary, because that's essentially what you're doing if you're using any of those things above. And clearly there's a scope for full hybrid and discretionary trading in your toolbox. You don't have to stick with one type, and it may be that different types are appropriate for different times of the day, a different trading circumstance, and of course, when you're on a holiday and when you're sleeping. The other exciting thing to share is that there are new innovations in technology that provide new opportunities for people like you. and me. I'm going to briefly go into them, but there is a webinar I'm going to invite you to, which is really important in terms of how that technology may be used. So I'm going to briefly describe it as we go through the session today, and of course, give you the opportunity to learn some more later. The key point is really you've got to decide what's right for you. There's no one way, no matter what anybody says, your responsibility as a trader is to find the things that you can integrate into your system, into your overall trading business, that are going to potentially make a difference. And it may, as I said already, may differ in times in your world where one is probably more appropriate than others. And also times, not only times in the day, but times in the week, times in the month. So let's just start by just giving you a few definitions. So when we talk about a model, then we're talking about a set of entry and exit variable based on a trading system. So, for example, if you were to do a breakout model, it would involve identifying a line of resistance by a code. It would suggest criteria by which it says that it's reached that. So it might be that it's closed above that line with a little bit of space, maybe half an ATR, with increased volume and potentially cost time of the day as well. And this model has a set of input variables which can be altered to suit different trading instruments, different timeframes, and different directions. From that model, what we can do, and I'm going to show you this live, and give you an opportunity to download a model and a file I'll show you what I'm going to give you, but I'll give you some examples of others where you have a specific set of settings called a step file, that you apply to a particular instrument, a particular time frame. So you may decide to do a 1 hour long EA on the NASDAQ. And when we talk about a book, and I'll also briefly reference this as we go through, a book is a group of EAs playing different instruments. I'll show you the power of having a book as well that reduces overall risk and optimizes profit potential. Now, what we need to do with this is we need to learn the stuff, okay? And the first part of learning is to understand exactly what I've said. So I've tried to do it in a diagram just to help along the way. So we have a model here. Let's say we had our breakout model, and we can use that on the US yen, the euro, USD, the NASDAQ, gold, copper, Bitcoin, whatever you want to do. We choose a time frame, which is the second for that, and then a direction. So each of these is a separate EA. So let's have a look at one. There we go. So you should see a Go Market screen coming up. Let me know if that's the case. What I'm going to do is show your model now. This is a Bollinger Bands model in gold. Okay. And I'm going to do a test of the last couple of years from it. And it's on a 15-minute chart, and it's short only. It only trades 2 days, and there's various times and exits. And my job is to teach you all of this stuff, of course. But what's important is that all of these parameters are user definable. So you can find the right settings for you, for the instrument, but also your risk profile. So if I just click start here, you're going to see a back test of these settings start to occur. So there we go. There's the equity graph associated with this model. And then what it'll do is it'll pop a back test results up in a couple of few seconds, hopefully. So you can see what the outcome is. What I might do is actually come back to that in a moment. Take you back to the PowerPoint, and we'll come back and have a look. So that's one model on one instrument, one direction, and one time frame. Okay, that's what I mean by an EA. I'll show you a few more examples. Now, just in terms of structure, and this will be important later. So traditionally, when we develop a model, we have our setup and variable settings, and we have a set of entry criteria, exit criteria, and instruction to trade if these are all ticked off. So that's the traditional model. Now, what I've moved to really is using something called include files or library files, which mean that we can use the same, if we're using the same functions on more than one EA, we can have these library files and adapt them to other models. Does that sort of make sense? So the relevance of that is going to become more important later, but in essence, it means that if I have a stop loss and a take profit based on an ATR multiple, I can set those, change the inputs accordingly, but it's the same setting. So if I decide, well, look, maybe there's a better way of doing this, I can just go in, alter the include file. That will change how the EA works. That's the power of this. As I said, I'm going to show you something later that will bring the power of that into even more context. Let's put back. Let's put back and just see if we can see if we've got a test result up. Yes, we have got a back test result up. So let's take it back a second. So this, just to put it into context, is on low volume. Okay, what do I mean by low volume? I mean 0.06 of a contract. Okay, 0.06. So in terms of what that means as an investment, I can give you, if I click on specifications here, full contract will cost $5,000. Okay, we're not trading that. We're not even trading 0.1 of a contract. We're trading 0.6. So 0.1 would be $512. 0.6 would be about, let's say, $300. Okay, so it's about $300 investment. Let's produce this. So a little shy of $3,000 with a maximum risk at any stage, $288. I'm sure many of you risk $288 on a trade from time to time. And this is just, I'm guessing this is probably here. So it's this pullback here. So you'd already made around about $1,700 before you got that drawdown. But it's important to look at the difference between this and this. So normally when people talk about EAs, they're really happy with 4 or 5 to 1. 4 or 5 to 1 ratio. Okay, so we've got this 2,800 and around about 188. So that's around 10 to 1, just to put it into context. And there's better than this. Let me just show you another one. Oh, by the way, would you like this? Guys, I can't see the general chat messages. If you would like this, type in yes. I'll give you it. And I'll give you the file of gold for free, okay? Now, while you're typing in yes, I'm going to just show you another model. Okay, let's just do, maybe, let's pick one. So this is one that was developed as part of Corsa Run, developed by people just like you who'd learned some stuff. Now, they didn't have to learn coding or programming or any of that sort of stuff. I did that for them, but they came up with the idea, and then we develop it. Let's do the Nasdaq on that. Okay, so we're going to trade the Nasdaq on this model, which is a moving average. So what this model is based on, it's a trend. It's a trending model. It aims to catch the middle part of the trend. So it will enter if the EMA 15 crosses the SMA 15 and then back again. Okay, it's really important that we have a basic price action and then something that helps along the line. So I've inputted those settings into there. This is MT5 strategy tester, by the way. So again, let's see how it's doing. So that's looking sort of favorable. And remember, this is on small amount again. So if we look back, so in this one, the fixed lot size is 0.2 of a contract on the Nasdaq. That'll cost you about $30. Okay, so we're reinvesting $30 again and again and again. Simple model. Number of different exits here, and we'll come back to why that's important later. But there's the backtest result. So you can see there, nearly $5,000 for a $235 risk. And that's, remember, that's a $235 risk at some time during this equity curve, possibly there. Okay, how's that for you guys? As I said, I can't see the I can't see the general chat at all, so I apologize if you feel as though I'm ignoring you. Let me just. Okay, so this is the in the questions. Okay, I'm seeing the questions now. That's good. Right. Okay. So, thank you. So, Chastity said. So, yeah, put it in the questions if you like the look of this. So that is how an EA works. It takes some work to get to there. You need to be absolutely crystal clear on the strategy on entry and exit, and then you have to do what's called optimize. Thanks, Brett. And then, of course, you optimize to find the right settings for the NASDAQ. And this is a NASDAQ. If we look here, you can see it's on a 1 hour chart. And on point 2 of the contract. And it's long trades only, not short trades. The reason for that, let me show you the reason for that. Just in case you're thinking, why doesn't he do long and short on the same EA? So let's do that. Same settings, but now we're going short rather than long. We do exactly the same thing. Watch what happens to this. So if we look at the graph, that's not particularly impressive, is it? Exactly the same settings. All we've done is we've changed the direction. Why is that? You'll have possibly heard the market cliche that says up the staircase, down the elevator shaft. That's why we're seeing that result there. That doesn't look good, and that's why we optimize for each direction. So long will be one EA, short will be another EA based on different settings. Hope that makes sense. Okay, so to the presentation. There's maybe a quicker way of doing it. There we go. You should see the presentation again. So there's 66 key stages in this. I'm not going to invest a lot of time in this, but we start with an initial concept, which is I'd like to trade a breakout. I'd like to trade a bounce. I'd like to. The Bollinger bounce strategy that you saw there early on, which is the one I'm going to give you, is when price moves outside the Bollinger Band and then back into it. Okay, so it's essentially a reversal or bounce strategy. Then we design the strategy in detail and develop a prototype EA. We make sure that I develop the prototype EA and make sure that it does what it says on the can. Then we go through a full back test, forward test, and then live and scaling. But at each stage of this, there is objectives and processes and testing procedures. Now, I'm going to run a webinar for anybody who wants to download that EA, that free EA and the set file. And there's a user guide on how to put it onto your platform. And there's an MT5 demo download link with Go Markets. Obviously, you heard from Lachlan earlier. So have a test, have a play. But I'm going to run a webinar in the week, which is going to take you through that step by step, show you some of the potential EAs you can use during doing this exactly the same model to have a play with them. So remember I talked about the power of the book. So here's these are EAs that the last program developed. So this is they're all on minimum volume, okay, minimum contract of 0.1 or below. So the Canadian dollar, this is a session smasher. There's the model I just showed you. This is on Bitcoin. So you can see $2,100 on 138 risk. ASX going the other way, $1,900 on $116 risk. And a ZZ strategy, which is trend breakout strategy on the GBP pound Aussie, 2,300 on 148 risk. All of those are exceptional. And on that webinar, as I said, I'll show you some of those. Now, remember I said the power is in the book. The power is in having a few ways working together. Because you're going to get this profit in all of them with the caveats associated with back tests, okay? So you can quickly plot these up. And the risk, you would imagine that you would do that. You would imagine you would do that on you just add them up. But that's not the case because, of course, they don't all trade at the same time. And sometimes you'll get one or two trades that go against you, but then you'll get another couple. So what it does is it automatically reduces the risk. So what you get is essentially a synergy of your EAs working together that mitigates risk and optimizes profit. So this book on Matrix, we need to consistently monitor, and we can do this. We've got a number of tools that do that. And this is what those 4 EAs look like if you were to put them together. Okay, so you can see there that we started off with 10,000, we're now over 17. So our total profit on those, just those 4 EAs on minimum volume, so using a margin requirement of less than $600 or $700, you're getting total profit in 2 years of 7,564 and a maximum drawdown of 334. So you see that draw, we've kept all the profit, but because they trade at different times, that drawdown is reduced again. Now, what I asked the guys to do, I said, pick 3 of the EAs that you've been working on. So we added 3 more. Total profit 14 and a half. Maximum drawdown is dropped again. Look at the nice equity curve on that. Okay, so that is the power of the book. That's why we go to develop a few EAs at the same time. Let me just show you another one, just so you don't think I'm pulling things out of thin air and making it up. So again, this is let's just find one that we've done recently. Let's have a look at this fractal euro yen. Okay, so fractal breakout. Maybe you're familiar with fractals. So this is on euro yen. Okay, same time period. We're testing 2 years. Doing 30 minutes short on this one. Let's just see if this is one that might do the trick for us. Okay, so that isn't a particularly good one. So what can we do? Well, we can put things in place that make it better. Okay, so even if we look at this, you see that's not very good result at all. We can see straight away from the testing that Wednesday and Friday are no good. So what we can do is we can take out Wednesday. We can take out Friday. So this is testing back over 2 years. So it's slightly better. By slightly better, I mean you've made $1,300 now, not $160. And so we can test all these variables. Just want to check on time. And on the session that I'm going to show you, I'm going to show you how to test multiple variables at the same time. Get the computer to do the work, not you doing the work, if that makes sense. Okay, so I want to show you that as well. But just what we do is we start with the anatomy of the price action. You intend to take advantage of, not with an indicator. So we're not saying we're going to do a moving average cross. We might use a moving average cross as part of our influence to say, right, this is a trend that's happening. But the bottom line is there are 3 reasons to get in: reversal, congestion exit, or exit out of a sideways trend, and trend continuation. And there are 3 ways to get out, essentially: reversal, congestion, or a false signal. So when we develop EAs, then that's where we start. That's where we start. So remember candle instruction and volume. It's absolutely critical to do this. John's question is interesting, actually. That was a while ago. So what's really important is that we do as John's indicated, we're not interested in win weight. We're interested in net profit. We're interested in maximum risk. That's what it's all about. And I'm going to talk to you about risk management later as well. It's going to, in terms of the next development. Okay, so just Okay, no open questions at this stage. And then we look for confluence factors. So, for example, the Bollinger bounce is the strategy is a bounce. The confluence factor is the movement in outside and then inside a Bollinger Band. All of your variables should be user definable. No black box stuff here. You need to know what anything that you're using is doing, and secondly, be able to adjust it to adapt to your trading style, your risk profile. There is nothing more important than that. So what we do is we identify our core components, and then we see if our entry works, and then we can add our exits accordingly. So that's the power of what we sort of do. And then on top of that, we can add other things. So what we've done is if we look at the back test result and a forward test result, then often there's a disparity. Now, that's created by a few things. It's questionable whether some of the data is okay if you look historically. But more importantly, is that different market conditions have occurred at different times during that 2-year period. So what we've done is we've matched EA to market regime for entry. Does that make sense? So develop this market regime indicator. Again, I'm going to flick back to MT5. I'm going to show you this. I'm going to show you the impact. So this is the market regime indicator. You can apply it to any time frame. So what it does is it uses 18 calculation points, 6 different regimes that can happen. And then it will indicate which market regime it is. So you can see here that a trend up low volatility we've seen happening there. It's gone back into a choppy regime there, and we're back up here into a trend of low volatility. Down here, of course, we've moved into trend down low volatility and then high volatility. So because what you will know from experience and what we found in EA is that if you don't take into account overall market conditions, then there are some strategies which will work well in any market. There's some but most strategies will work best in some markets and worst in others. So what we've done is we've instigated this market regime into it. Now let me just show you something. If we go back to that MA snap. So let's find out another one. Let's find another set file we can have a look at. Let's do a different one. So this is Breakdancer. I need to do that again. So Breakdancer is something that's been a short-term trend and then breaks either side. So this is a preliminary model. It's on gold. So 15-minute buy. Okay, let's see. I just want to see if that's got. Whoops. Let's see if this does the trick. Okay, another nice EA. Okay, really nice backtest results. $8,500, $400. So that's about 20 times risk to reward, isn't it? Only a 57% win rate. That's okay because look at the average profit is 163. The average loss is 61. So about 2.5 times risk to reward. Now, if we look at the inputs, this would be interesting. We could potentially improve that. There's our 6 market regimes. So we can potentially improve that. We've imported this into all of our EAs to see if we can make our EAs better or our EA backtests more accurate in terms of saying, look, this is more likely to work in every market condition than it would be if it wasn't in there. Okay. The other function we put in is what we term maximum give back. This has got a maximum give back function, so we'll give back. You'll have all seen the scenario where we're making profit, we're making profit, we're making profit, we're making profit, and then boom, something happens, and we've given it away in a heartbeat. Even with a trail stop, you can give quite a lot back, particularly if price action has moved up really quickly. So we can put something in that says, no, we're not prepared to do that. Let's just change this, and we'll run a back test. Now, again, what we can do is we can test every single percentage if we really want to, but you do it in 5% increments. So let's see. So now we're doing a maximum give back of 30%. And if we look at the back test, it's not as good. So we've still got nearly 8K, but that's slightly less net profit. But look at our drawdown, that's gone up. Now 375, it's still exceptional. But because we've got a little greedy and done that to right, then it's not been as good a result as the 50%. So again, that has been a game changer for us in terms of the risk management. If you don't manage risk in EAs, you don't manage risk in discretionary trade, the market's going to pinch your cash. It's really that simple. So that's why risk is everything about it. Maximum give back function that is. There's also developments in AI. We're teaching people to use AI for coding. And we're moving down the machine learning, which is another story for another day. I'm conscious of time here. And what is possibly one of the most exciting innovations that I'm going to run a session on for those of you who are interested, is using external sources of information to inform EA decisions. Even more exciting than that is using external sources of information to inform discretionary decisions and discretionary actions. So I want you to introduce you to Trading Sentinel 360. It's coming soon. So this has EA and discretionary applications. So it started off just being about EAs and managing that almost like a mothership. But now we are looking at discretionary applications as well. So what it does is it monitors externally and internally to facilitate trade position account management. So let me give you an example of that. A simple example of that level one is that we have, let's say, only EAs. So at this stage, you can do a take profit, a stop loss, and a really ordinary trail. Well, what if you could do maximum give back as well? What if you could do a SAR dot popping over the current price to say trend is changing? What if you could do a price moving average cross? What if you could do a dynamic ATR stop or take profit based on current market volatility? Does that make sense? Does that sound exciting? So what if you could do, US CPI data is about to be released. Let's close it down, or let's tighten the stop, or let's partially close our position and let the rest run. So we can use EAs for different parts of the trading process in the same way that you use automation now for take profits, stop losses, and orders. What about if in your pending orders you were to include a market regime, or which, by the way, I'm gonna give you as well for free if you want it. Do you want it? And obviously, monitoring what's happening internally is important as well. What's your exposure? What's your margin level? And would it be useful if you got a notification to say, "Hey, you're too overexposed in the yen crosses"? Let me show you the basis of that very quickly, if I can. So, I just put files before we started today. So these run when you ask them to. So these are scripts. So I'm going to give you. So this is our asset exposure. So it gives us. It looks back over essentially the month of trading there, and says how we were exposed, and if we had more than 3 positions open in any one of these assets, what was the outcome? Now that becomes a lot more. There was one I ran for a year. We'll do that again. I'll show you that the session. Then that sort of informs you're at a high risk level. So what does that mean? Well, we can put in some automation that says, don't enter any more trades in yen crosses until we've closed one of these positions down. 7 positions is too much. So the ways of measuring that, which is also important. Now, the other thing that we're going to do, look at this. That's what I wanted. And this is all about, okay. So this is performance analysis on EAs. Okay, so if you're EA trading, these are magic numbers. So this identifies each EA. And what we can do is we can say, how's that performing? So this is from a live account. So it pulls the data from a live account, produces this report, and gives us an equity curve for the whole portfolio, gives us some key metrics for the whole portfolio, and then it gives us it gives us a trade by trade, a asset by asset indication. Now, what we're doing is we're adapting this for discretionary traders so that you can do it by sector if you want to, or you could do it by asset class if you want to, in the same way that we did that exposure calculator. How useful would that be to see how each strategy is doing? If you wanted to open a trade, then all we'd have to do, if we do a new order, you'll see in the comment there, you can put in what strategy it is. So if you do that, then all of a sudden this evaluation tool, this performance evaluation tool, could tell you how each strategy is performing. How useful would that be? It takes about 2 seconds to run. Right. Let's go back to our. There we go. So, and then we can integrate data to amend positions. So, for example, US CPI or non-farm payrolls, and we can choose what we want to do if that particular data point is coming. So we've got this sentinel, if you like, that monitors all of that sort of stuff, and we can then program in what we want the response to be from a personal point of view. Potential for new EAs or notifications on things like commitment to traders data. So the commitment to traders is a report released every Friday. If oil, let's use all futures as an example, if all futures institutional volume has changed, then often we see a gap on Monday, and then subsequently it goes in that direction for some time. We can do that, set ourselves up, set a pending order, all ready to go, or indeed action EA. We can monitor and intervene on unexpected significant black swan events. We've got one thing called the handbrake, which if it drops by intrabar, let's say over 280i, it means something strange is going on. And we don't want to wait till the end of that bar or till the next chance we get to look at a computer screen to say, oh my God, what's happened to that trade? Many of you will have seen that. And then, of course, there's black swan events where it happens across multiple assets. So everything drops at the same time. So what this Sentinel does is from an EA point of view, it manages that automatically. From a discretionary point of view, it can monitor that automatically, or it can send you a notification to say, you need to go and have a look at this right now. How useful would that be in terms of risk, performance reporting, and so much more? I've given you a really brief overview. Now, really brief overview. Now, so if you want to be part of learning more about that and the downloads, then what I've done is I've put together this ultimate Trading Edge 360 download hub. So you can download, that's the link to an MT5 demo account, download for the market regime indicator and user guide for free, EA and set file for free. You'll be invited to a webinar to explain in more detail how to use it. And then we've got a Sentinel webinar that's going on this week. So I've put it all in one place to make it easy. So you don't have to go hunt around and for links and record them and all that sort of stuff. I'd love to have you there if you're able to make it long. Just go back to the screen. There we go. So that's the ultimate package. TraderIQ.com.au/360. I've tried to pack as much as I could in here, trying to make it real by showing you it, trying to make it real by giving you the ability to test things out for yourself. So this is what you get: the Sentinel webinar, your first model set file and support. And And of course, if you haven't got MT5, you can get a demo to test it all out. So that's all there for you guys. And I am happy to do that. Now, I think I've probably come to the near the end of my time. I just need to double check my notification.
That's Mike. End of the time now. Yeah, we'll take any questions if there's any questions from the audience.
Of course, what I want you to do most from this, while waiting for any questions coming through, is just commit. Whatever you're going to do, commit to it properly. If you think hybrid automated trading could be for you, I've given you some tools, some freebies, some opportunities to come and find out more, and then to get more information to make the right decision for you. And of course, review the content. You've got my email address, hopefully, in the chat there. You've got the slides, hopefully, in the chat there. Review the content, ask questions by email or ask questions now. Yep, I see that Sue's posted that. You're a legend. Thank you very much. So the PDF of the slides is in there. My email address is in there, and of course that link is in the chat too. So feel free to avail yourself of those. Is there any other questions that anybody's got? Let's see, that I can answer for you.
Yep, seems that there's no questions, Mike. All loud and clear, I guess.
Thank you very much, Alyssa. Alyssa, who's asking questions again. She is part of this Sentinel 360. She's a wonder. Privileged to have her on board, and thank you for popping in, Alyssa. It's always great to see you here too. Okay, guys. Well, look, if that's all that you need, thanks, Wayne. Cheers for your support as always, buddy.
Yeah, thank you very much. Cheers.